Hello guys, finally our CFO paper had done. It is one of the easiest question paper in recent 3 attempts. So will find out how the questions are arrived here. The first one they gave from operating segments. In total 15 MCQs, all MCQs are direct questions. If you know the concept well, we can able to write all the MCQs within no time. So we can check over here. First one they have given from operating segments, which is an easiest one. And coming to the second one, they have given consolidated financial statements prepared as per Ind AS. They have not mentioned as Ind AS 28 or 109 or 27 or whatever it might be. So here they have given that accordingly as per Ind AS. So where we are preparing consolidated financial statements. So here, so we are going to check. So associates and joint ventures we are preparing CFS. At the same time for subsidiaries also we are preparing CFS. So while coming to the third question coming from government accounting, so they're asking which of the is not a feature of government accounting. So you know what are the features of government accounting, so we can check it out here. Double entry, adherence and transacting through banks are the features of government accounting. So while coming here to the fourth one, it is also from government accounting. So here we need to check out which of the following is not a general principle of government accounting. So we can find out here. So all the general principles they have given. So which is not, you need to find. And the fifth one they are giving relating to non-controlling interest. So NCI we can follow either through proportionate share in the net asset basis or fair value basis. So here we are having that it can be recognized either through PSNA basis or fair value basis. If NCI proportionate basis when we are preparing, so we are getting the partial goodwill. Fair value when you are preparing, we are getting the full goodwill. So while coming to the sixth one, which of the following here, the financial assets. So here you can check, Nana. So cash is a financial asset, equity instrument of other entity is a financial asset. So under the derivative instruments we discussed that if you are having the contractual right to receive cash, that is also a financial asset. So while coming to the seventh one, they have given the question here from financial instruments. So which of the following here, the financial instruments? Total 3 financial instruments that we are having: financial assets, financial liabilities and equity instruments. So what evidences the residual interest in net assets? Assets minus outside liabilities, the residual interest is what? You can know directly, equity instrument. So while coming to the eighth one, simple, we can see here they are asking about which report that we are doing relating to improve the workforce performance, recruiting procedures and HR operations. Simply we know that human resource reporting. And coming to the ninth one, so they have given here, so to find out the expenses relating to intangible assets. So whether the asset recognition criteria is satisfied or not. Before asset recognition criteria is satisfied, the expenditure will be charged to profit and loss account. After recognition criteria is satisfied, will be shown as an intangible asset. See here they have given that Milky Way is conducting a research in respect of attaching the self-charging batteries. So it has already incurred 15 lakhs expenditure last year for research. During 23-24, it incurred 5 lakhs each month. So total 12 months. So they incurred 5 lakhs each month. On 1/5/2023, directors found that research was successful and being the cash flows 3 lakhs we can getting from coming years. So here when the asset recognition criteria is satisfied, from which date onwards the cash inflows are started. So we can say the research is successful as on 1/5/2023. Till then whatever expenditure you are having, that will be charged to profit and loss account, and later on whatever the expenditure is there, so that will be go to intangible asset. So here for 1 month we can see 23-24 up to 1st May 2023 we have 1 month. 1 month means 5 lakhs will be charged to P&L account and 55 lakhs will be charged as an intangible asset. We need to capitalize. And second one is a direct question. They are asking what is the goodwill as per annuity method. Under annuity method goodwill formula, super profits into annuity factor. Super profits, how can we identify it here? Average profits minus normal profit. Average profit directly given in the question. Normal profit you need to find. Normal profit, how can you find? Capital employed into normal rate of return. So we will get actual profit already given. Normal profit you need to find. We got super profits into annuity factor also given. So we will get the value. And the 11th one they have given from leases. So under the leases, So here Aura Limited leased a machine with a fair value of 1,65,000 for 5 years finance lease. The initial direct cost they have incurred on this lease is 1250 and present value of minimum lease payments after the discounted, the present value 1,58,400. So here they are asking what is the lease liability or ROU of the asset, Nana? So check out here. Under the requirements of Ind AS 116, the amount in which the machine should be recognized in the Aura's financial statements. What is ROU asset? So how can you get what is the right of use of asset, Nana? So here lease liability plus initial direct cost. So already we have in lease liability and initial direct cost also. We can add, we will get the value. So while coming to the 12th question, it is also a direct question. So you can check over here, original cost of an asset they have given, accumulated depreciation they have given. We can find out the carrying amount, Nana. Cost minus depreciation will get carrying amount. And similar machine should be sold in the same locality for 65,000 and selling expenses is 4,000. So based on that we can find out what, Nana? Fair value less cost of disposal. So here the fair value of the similar kind of machinery is 65,000 and cost of disposal is given 4,000. We will get what is fair value less cost of disposal. And they are having value in use. So value in use is nothing but present value of future cash flows, clearly given. Present value of future cash flows is 68,000. So fair value less cost of disposal and value in use, whichever is higher, we will get a recoverable amount. And carrying amount and recoverable amount difference is impairment loss. You can find out easily. And we are having that 13th question. So we need to find out gain on bargain purchase. So here A Limited acquired 80% of equity interest in B Limited. For 80% stakes, they are paying purchase consideration 600 lakhs. So what is the net assets of B Limited? We need to find out. Net assets directly not given. So here identifiable assets given and identifiable liabilities given. We can find out identifiable net assets. So identifiable net assets is nothing but identifiable assets minus identifiable liabilities. We will get identifiable net assets. So in that we are having the fair value 20% of NCI, they have given 90 lakhs directly. So NCI no need to calculate through proportionate share, already fair value given, which is 90 lakhs. So identifiable net assets we will get through 925 minus 150 and minus NCI, already they have given 90. So we will get what, Nana? A share of identifiable net assets. So for that share, how much he is paying? 600 he is paying. So based on that, you can check it out. What is the gain on bargain purchase? And coming to the 14th one. So this is a direct question. And also as per Ind AS 28, Ind AS 28 deals with what? Investments in associates and joint venture. So in order to get the significant influence or joint control over that, so which method of accounting we are following directly? We know that it is an equity method. And last question they are asking about EVA, no? So economic value added. So what is the formula of EVA? So we want net operating profit after tax minus capital employed into overall cost of capital or weighted average cost of capital. No PAT directly not given. But what is given here? Net operating profit before interest and before tax, which is nothing but EBIT given. So in order to find out net operating profit after tax, EBIT is given. So we can directly get EBIT into 1 minus tax rate. So EBIT 17,50,000 minus tax rate, we are having 30%, we will get no PAT. Capital employed given, weighted average cost of capital given, you can calculate and find out the value of EVA. So total 15 questions, straight questions they have asked. So within no time we can do that. And coming to section B. So section B, the first question they are giving from property, plant and equipment. So Ind AS 16. So from Ind AS 16, property, plant and equipment. So here also they have given not a direct question. So under the revaluation. So under the revaluation accounting, we have two techniques. So one technique, so we are going with the gross carrying amount. Another technique that we are having elimination of accumulated depreciation. For both the things, they are asking journal entries. That is for 7 marks. And second question is the combination of intangible assets and impairment. So here it's not intangible assets, directly impairment question that they have given. So here a major depreciable asset of Padma Limited was purchased at cost value they have given, useful life also they have given, the estimated residual value they have given, selling price they have given here 25,000 millions and cost of disposal. Sale value minus cost of disposal also we will get, and we need to find out the value in use. So what are the questions they are asking? What is the carrying amount of an asset? Carrying amount of an asset we need to find out. How can you find cost minus accumulated depreciation? So we will get carrying amount of an asset. Next, value in use. How can you find out the value in use? The present value of cash flows. All the cash flows present value which is discounted at a rate of 9%, discount rate 9% given. So discounting factors also they have given for 9% for 5 years. You can check out here. So first year, second year, third year, present value annuity factors they have given, present value factors they have given. So based on that, we can find out what is the present value of future cash flows. Under future cash flows, we need to consider the salvage value or residual value also. And coming to next, they are asking about impairment loss. If you know the carrying amount, fair value less cost of disposal, you know, and value in use also, you know, whichever is higher will be the recoverable amount. So carrying amount minus recoverable amount, we will get impairment loss. So how do you get revised carrying amount? Already we know the carrying amount. So minus impairment loss, we will get revised carrying amount. So direct question, very, very easy question. And coming to the third one, they have given from share based payments. It's a direct question. This is one also. So from share based payments, how we have to make it. So as per that, how the expenses that we need to recognize, employee benefit expenses for each and every stage. So here during the first year, 36 employees left, and the revised estimate of total employee departure over the 3 years, they decreased from 20% to 16%. So based on the value changes, we need to go. So here initially we are having 800 employees, and we are expecting that overall 3 years 20% will be the, we can say, discontinued percentage. So you revised that percentage from 20 to 16%, next year 16 to 13%. Accordingly, we need to calculate what is the employee benefit expenses. Based on that, we need to frame the journal entries. So on coming to here, so the next question is relating to valuation of goodwill and valuation of shares. And valuation of goodwill and valuation of shares, here directly they are asking intrinsic value method, which one also call it as net assets method or net worth method. So how can we calculate that? First, we need to find out what is the amount of goodwill. So for that, we need to find out what is the capital employed. So after getting the capital employed, so we need to find out what is the future maintainable profit. So based on that, we will get the value of goodwill, and that goodwill whatever we are having, so that goodwill we are adding to the capital employed, and if any non-trade investments are there, that we are adding. So based on that, we will get net assets. Net assets divided by number of equity shares, we will get the value per share under intrinsic value method. And next one is also direct and easy question. So direct question from the book they have given here. So all the standard assets, substandard assets, and while coming to the secured under doubtful debts, we are having up to 1 year, 1 to 3 years, more than 3 years, and unsecured portion of doubtful debts and loss assets. So based on that, so provision we will calculate. So you know that provision calculation percentages relating to standard assets, substandard assets. While coming to doubtful debts, so whatever we are having in that up to 1 year means what is the percentage? 1 to 3 years and more than 3 years, and for unsecured and loss assets. So accordingly, we need to calculate what is the total provision. So previously, most of the students might not expect a question from NBFC. Last 3 attempts they have not given. So this is a surprise. And coming to the next question, so which they are asking about internal reconstruction. So under internal reconstruction, this time they have not given many adjustments, but they have given to prepare the balance sheet. Okay. So it is also an easy question. We are having 4 to 5 adjustments. Based on that, we need to find out the revised balance sheet by seeing this old balance sheet. And coming to the next question, 5. So this question number 5 comes from business combination. So under business combination, we are having the concept called reverse acquisition. So under the reverse acquisition, so initially we are having 2 companies, LS Limited and MS Limited. Now they formed LMS Limited. So here we are having 2 acquiree companies and 1 acquirer company. So here, what is the twist they have given last? However, the control of LMS Limited is taken by the management of MS Limited. So that means after the amalgamation, MS Limited having the control. So in that case, we can say who is the accounting acquirer? We need to find out. So here, as per legal terminology, here legal acquirer is LMS Limited, but accounting acquirer who is having the control MS Limited. We need to do the problem relating to reverse acquisition. Okay, all fair value of the assets and liabilities they have given. Accordingly, we need to find out how much purchase consideration will be paid by MS Limited to LS Limited. Okay, so based on that, we need to prepare the balance sheet also. How many number of shares they are given as purchase consideration. For that, you need to find out what is the intrinsic value of MS Limited. Accordingly, how many number of shares to be issued to settle the purchase consideration. Very easy, Nana. Fair value of the business 15,000 given. MS Limited 30,000. So intrinsic value we can get. Intrinsic value is nothing but fair value of the business divided by number of equity shares. We will get the intrinsic value. So that many number of shares, how many we have to issue to settle 15,000. So accordingly, we will get purchase consideration. Based on that, we need to prepare the balance sheet. Okay, 14 marks. Very, very easy question they have given here. And coming to consolidation. So every time consolidation they are asking, so directly the questions like acquirer and acquiring companies, but this time they have given chain holding. So this question a little time taking, so but also it is easy to do if you know what is the NCI value properly. So P Limited having stakes in Q Limited having stakes in R Limited. So we need to prepare consolidated financial statements in the books of P Limited. So based on that, how much is the non-controlling interest towards the Q Limited we need to find, and what is the non-controlling interest towards the R Limited also we need to find. Accordingly, we need to prepare the consolidated financial statements, and some of the adjustments also they have given over here. So under that, so here P holds 80% in Q Limited, Q holds 75% in R Limited. So 80 and 75%. In this 75%, again 80% belongs to P Limited. So that will be becomes an NCI for P Limited in relation with R Limited. So we are having PQR. P Limited having stakes 80%. So that means whatever Q Limited done, the activities on that 80% is held by P Limited. Now Q Limited having holding over here 75%. In this 75% also 80% of holdings belongs to P Limited. Based on that NCA we need to calculate. Okay, so that is a major task in this, and rest of the things are common just like consolidation. And also one more adjustment over here. When here we are having that unrealized profit. So 35 lakhs included in the inventory of Q Limited is the inventory has been purchased from R Limited. So R Limited supplied some inventory to Q Limited. R Limited supplied to Q Limited. Q Limited point of view, just to check, Nana, Q Limited is a parent company for R Limited. R Limited supplied some inventory to Q Limited. So we can say it is an upward stream of transaction for Q Limited point of view. So what is the P Limited point of view? We need to check and we need to do this question. And seventh question, directly they are asking from value added statement. So in this we need to find out what is the gross value added. So based on that depreciation also they have given. So what they are asking here, value added statements. So under the value added statements, we need to divide the activities to all the stakeholders. How much the value created by the company and the value how it is distributed by the company, we need to get it all. That is about 7A. And 7B is a theoretical question. So they are asking about sustainability reporting. So what is corporate sustainability reporting, and also what are the internal and external benefits of sustainability. So which is there in the material. And also coming to next, also we are having the theory question from government accounting. CGA they are asking, role of CGA, not C&AG. Controller General of Accounts, we have the role. There is a short note, you need to do that. And most expected question here we are having, they are asking the funds of the government, consolidated fund, public fund and contingency fund. So that we are having article 266, 1, 2, that one, 267, whatever we are having here. Next, last question they are given, business combination achieved in stages. business combination achieved in stages. Here also only the value changes they have made and direct question from the textbook they have given. So we need to find out what is the amount to be transferred to the profit and loss account, and we need to find out what is the goodwill or gain on bargain purchase for acquisition of control. Okay, so as along with the question paper is concerned, and the question paper is very easy and it is also not lengthy. Okay, most of the students, so they are expecting for exemption, and also I hope you also performed well. So that's the end of the session, and all the best for your next exams. Thank you.